computation of GAV for different types of house properties. Now this is very important, students. How to calculate GAV for different types of house property means what? There are different options, and for different options you have to find out how to calculate GAV. Now if property is self-occupied, SOP oblique unoccupied house property. In that case, how to calculate income from house property? So GAV nil for two houses, only for individual and HUF. This is very important. Only for this benefit is available only for individual and HUF. No deduction of municipal tax is paid by the owner. Only one deduction is available here, interest on borrowed capital, but no other deduction. So if property is self-occupied, two houses can be treated as benefit will be available for the two house. Means what? GAV of the two houses will be 0. Now here you will not get any deduction of municipal tax. Before some year it is one house, government is giving benefit of only one house. Now it is two houses. So this is the first provision when property is self-occupied. So for two property, it will be considered as nil. GAV is considered as nil, but this benefit is available only to individual and HUF. If property is let out for a whole year, means if it is let out, then it is very simple. Just we have done the calculation before some time. So higher of ER or ARR, that will become your answer of GAV. Just now before some time we have done this thing and we have made the practice of the same. Like in this example we have done the same thing. So now no question of vacancy since property was occupied for the whole year, and you will get all the deduction like municipal tax deduction is also available, standard deduction is also available, interest on borrowed capital is also available on this. So that we will understand with the help of full-fledged example. Now let out property vacant for a part of the year. Now this will create here you have to understand it little bit, and then only you can proceed further. Like ER shall be calculated for the whole year. So whenever property is let out for a part of the year, in that case ER means expected rent. How to find out expected rent? MV or FR, whichever is higher, but subject to SR, that already we had discussed. So that is to be calculated for whole year, even though it is let out for a part of the year, because we are charging the notional income of the house property. While computing ARR, actual rent received, rent for the period for which the house was vacant shall be excluded. That means the house remains vacant, that will be excluded. Rent for the period for which the house was vacated shall be excluded. That means after excluding that, if ARR is greater than ER, if actual rent received is greater than ER, then your GAV is equal to ARR. Means in that case, your ARR will become answer. But when ARR is less than ER, that means here ER is greater than. But this, why this ER is expected rent is greater than actual rent received? Because due to the vacancy, loss due to vacancy is there. So that is why this, that is why ER is greater than. In that case, you have to take ARR, actual rent received, and don't go for ER. If your, and last one, if your ARR is less than ER due to any other reason, then your, in that case your GAV is ER. So these 3 points will make the difference. So that you have to understand very clearly what is ARR. If ARR is greater than ER, then you have to take ARR as an answer. If ARR is less than ER due to the loss of vacancy, then in that case ARR will become answer. If ARR is less than ER due to other reason, then in that case ER will become your answer. So we will solve some example based on this concept so that you will get more understanding. Now let out for a part and self occupied for part of the year. Means if it is let out for some part of the year and it is let out or self occupied for other part of the year, then ER shall be calculated for the whole year again, but ARR shall be calculated for let out period only. So here what is the JAV? Higher of ER, that is calculated for the whole year, and ARR for let out part only. Whichever is higher, that will become your answer. This is very important and very tricky. Now deemed to be let out property means if assessee is having more than two houses and he is using all of them for himself, he has the option to choose any two houses as SOP, that is self occupied property, and other houses will be deemed to be let out. So GAV of DLOP, deemed to be let out property, is equal to ER. Here ER will become your answer because there is no rent, since both HPs are SOP, means here there is no ARR because actual rent received is not there. So that is why what you have to consider as GAV in case of DLOP, ER, expected rent. But GAV of SOP is nil. But if it is SOP, then in that case your GAV is nil. So in case of DLOP, deemed to be let out property, your GAV is your expected rent. And how to find out expected rent? I already given you the formula to find out the expected rent. MV or FR, whichever is higher but subject to SR, and GAV in case of self-occupied property is equal to nil. That you have to remember. Now single house, one of portion is let out and other portion is self-occupied. So SOP is equal to GAV and GAV is equal to nil. No deduction on municipal tax paid because your the portion in which property is self-occupied, in that case GAV is nil. Interest is deductible subject to the limit of 30,000 on 2 lakh, that we will discuss later on when 30,000 is available and when 2 lakh is available. For LOP, let out property, ER will become your answer, shall be computed on proportionate basis. Means if there are 50-50%, house is divided between 50% first unit and 50% another unit, then you have to calculate ER on the basis of 50%. You don't have to calculate on 100%. Okay, let us say MV is 1 lakh. So 50% of 1 lakh is 50,000. So now in that case, what MV what is your answer of MV? Your answer of MV is 50,000 because your house is divided into 50-50 portion. Now to understand this situation, let us discuss some examples so your concept gets clear. Anirudh has a property whose municipal valuation is 1,30,000 per annum. So MV is, this is MV. Now fair rent is 1,10,000 FR. So whichever is higher, so this is higher. So that will become first answer. And standard rent is 1,20,000. Now you have to compare this with SR. Now in that case, if you 1,30,000 and 1,20,000, whichever is lower, so 1,20,000, this will become your ER. So this is your answer of ER, expected rent. MV or FR subject to maximum of SR, 1,20,000. Now property was let out for a rent of 11,000 per month. So that means it is a normal let out conditions throughout the previous year. So what is this situation? Property let out for the whole year. This second point. So now how to find out GAV? Higher of ER or ARR. Whichever is higher, that will become your answer. ER or ARR, the higher value will become your answer. So here higher of ER or ARR. So higher is 1 lakh. One more thing is given. The property was let out on rent of 11,000 per month throughout the previous year. Unrealized rent was 11,000. So now you can deduct unrealized rent also. Compute gross annual value for the assessment year 2022-23. So in that case, 1,32,000 minus 11,000, so 1,21,000, because to find out ARR, what is the formula? rent receivable minus unrealized rent. So 1,32,000 and 11,000 rent per month is there and it is not realized. So that is why it is deducted. So 1,21,000 is answer. Now from these two, whichever is higher, that will become your answer. So higher is 1,21,000. So this is your GAV. That is mentioned here also. But there is an alternate view to find out that answer. If, as per income tax return, unrealized rent is deducted from GAV, then GAV would be 1,32,000. So if you think that GAV unrealized rent should be deducted from GAV, in that case your answer of ARR is 1,32,000. Here you will get 1,32,000. And this is 1,20,000. Now you have to make comparison. So again your answer is 1,32,000, and from this 1,32,000 you have to deduct 11,000. So you will get 1,21,000. So same thing you will get. So that is the return in another way. Deducted from GAV would be 1,32,000. Being higher of expected rent is 1,20,000 and actual rent is 1,32,000. So from 1,20,000 and 1,32,000, higher is 1,32,000. So that will become your answer of GAV. And thereafter, from unrealized rent of 11,000 would be deducted from GAV of rupees 1,32,000 to arrive NAV, net annual value. So that will become 1,21,000. The same answer you will get, but from a in a different way. So this is the alternate view to get the same answer. Okay, now next example. Now Ganesh has a property whose municipal valuation is 2,50,000 per annum, fair rent is 2 lakh per annum, and standard rent is 2,10,000. So from this municipal valuation and fair rent, higher is municipal valuation, so 2,50,000. Then standard rent is 2,10,000. So your ER answer is whichever is lower. So 2,50,000 and 2,10,000. So 2,10,000 is your answer. Property was let out for a rent of rupees 20,000 per month. However, tenant vacated the property on 31st January 2021 and unrealized rent was 20,000. Compute GAV. So this is little bit difficult answer because here loss due to vacancy is also there and unrealized rent is also there. So first of all, find out ER. So here we have already find it out. Higher of MB or FR, whichever is higher but subject to SR. ARR, rent received or receivable minus unrealized rent. So rent received is 2 lakh. How this 2 lakh? Because per month rent is 20,000 and it is let out. Property was vacated by the tenant on 31st January. That means if you count from April to January, you will get 10 months. So 10 into 20, 2 lakh minus 20,000 unrealized rent. So is given in the example. So that you have to deduct. So 1,80,000. This is the answer. So from this, you have to find out. Now, if the property was let out for 2 months, that is for period, it remained vacant. ARR would be 2,40,000 minus 20,000. That is 2,20,000. Thus, we can say that ARR is less than ER due to vacancy. Thus, GAV is equal to ARR is equal to 1,80,000. So here also your answer is normally what is your answer? ER or ARR is whichever is higher. But in this case, 1,80,000 will become your answer. Because why ARR will become answer? Because here it is clearly said, if ARR is less than ER due to vacancy, so our house remains vacant. In that case, what is your answer? ARR will become your answer. So that is the same situation created here. So in this case, ARR is your answer because this answer 1,80,000. Why we got 1,80,000? Because house remains vacant for 2 months. So you have received rent only for 10 months. So 20,000 into 10. So 2 lakh minus 20,000 unrealized rent. So 1 lakh 80,000 you have received. So your ARR is less than ER due to vacancy. So in that case, your ARR will become answer. So same thing we have applied here. So ARR is your answer. Now, Srimati Rajalakshmi owns a house property at Adyar in Chennai. Municipal valuation of the property is 5 lakh. Fair rent is 4 lakh 20,000 and standard rent is 4 lakh 80,000. In that case, 5 lakh and 4 lakh 20,000, whichever is higher, 5 lakh. Now you have to compare with standard rent, 4 lakh 80,000, whichever is lower, 4 lakh 80,000. So this is your ER, 4 lakh 80,000. Now property was laid out for 50,000 per month up to December, means April to December, 9 months. So 9 into 40, 9 into 50,000, you will get 4 lakh 50,000. Now the tenant has vacated the property and Srimati Rajalakshmi used the house for self-occupation. Means now property is self-occupied. Means house remains vacant for any other reason, not because of loss due to vacancy. Rent for November and December 2020 could not be realized. That is unrealized rent. That is 50,000 into 2 because this is unrealized rent. So 4 lakh 50,000 minus 1 lakh. So 3 lakh 50,000 is your answer. Now here your ARR is less than ER due to other reason, not because of vacancy, because house doesn't remain vacant because it is self occupied by Mrs. Srimati Rajalakshmi. So that is why ARR is less than ER due to other reason. In that case, what is your answer? ER will become your answer. So that is why what is your GAV? ER is your GAV. GAV is equal to ER, expected rent. That is the case number, that point we have discussed here. If your ARR is less than ER due to any other reason, in that case GAV is equal to ER. That will become your answer. So that is why that concept will is clarified here. Municipal taxes are to be deducted from GAV if municipal taxes have been borne by owner. I already mentioned this concept in one of my video. Owner, and they have been actually paid during the previous year. If it is actually paid during the previous year, then only it is deductible. Otherwise, it is not deductible. So municipal taxes have been borne. Borne means if it is paid by owner, then only deductible. And if it is paid during the previous year, these two words are very important. So when it is paid by tenant, not deductible. If it is payable, then also not deductible. Now points to remember, municipal taxes are allowed as deduction in previous year of payment, even if they relate to the past years. So that means if municipal taxes are paid for the past year in current previous year, then also deduction is available. Municipal taxes levied by foreign local authority, deductible if such taxes are paid by owner. Means if you have paid tax to a foreign local authority, then also it is deductible if it is if taxes are paid by owner. Now refund of municipal tax paid, whether it is not taxable, it is not taxable because whatever amount you have paid, that is given back to you. So that is why it is not deductible. If municipal taxes are borne by tenant, rent received receivable should not be increased to calculate rent, since it is the duty of occupier of the house property, that is tenant, to pay the municipal taxes. Means let us say 5,000 is the rent that is charged to the tenant, but now let us say 1,000 is also paid by tenant as a municipal tax. So now whether its rent of that tenant will be considered as 6,000, answer is no. Rent is only 5,000 because to pay 1,000 is the obligation of the tenant. So if it is paid by tenant, so you don't have to increase your income by 1,000 because you are having understanding that it is paid by tenant, so that is why our rent income also increased by 1000. So that is not the case. In that case also your income remains 5000 only. So that is why it is clearly said that if municipal taxes are borne by tenant, rent received and receivable should not be increased to calculate rent, since it is the duty of occupier of the house property, that is tenant, to pay the municipal tax. So what things you have to keep in mind while you are calculating municipal tax? Number one, municipal tax should be paid by the owner, borne by the owner, then only it is deductible. It should be paid, then only it is deductible. If it is payable, not deductible. Then if it is paid by tenant, then owner will not get the deduction for the same. Now, if municipal tax paid for the past year in the current year, then also deduction is available. If municipal tax is levied by foreign local authority, then deductible. If such taxes are paid by owner, then deduction is available. Municipal tax refund is paid to you, then it is not taxable. Then last point, if municipal taxes are borne by the tenant, then it will not increase your rental income, because it is the obligation of the tenant to pay the municipal tax. So that is why he has paid. So that is why you don't have to increase your rent amount. Now net annual value. What is net annual value? So here, how to find out net annual value? Very simple, students. GAV, once you find out GAV, from that you have to find deduct municipal tax again, paid and borne by owner, then you will find out GAV. So how to find out GAV mathematically? GAV is equal to NAV is equal to GAV minus municipal tax paid by owner. So you will get NAV. Answer of this will become your NAV. Very simple, students. Now standard deduction. Deduction under section 24. There are two deductions. Standard deduction section 24A. Standard deduction 30% of NAV shall be allowed from NAV. That is flat deduction and is allowed irrespective of the actual expenditure incurred. So how much you have spent, that is not important. No other expense shall be allowed as a deduction while computing house property income. Now SOP, standard deduction, is equal to nil, as NAV itself is a nil. Means what? Here standard, what is the rate of standard deduction? The rate is fixed, 30% of NAV. Whatever is your NAV, you have to get 30%, you can get 30% of it as a deduction. So that is why no other deduction is available. No expenditure you can write down now is a deduction. But in case of SOP, self-occupied property, NAV is 0 and NAV is 0. So that is why there is no point in calculating 30% of NAV. So your standard deduction 24A is also 0 if your SOP is nil.